All right, here we are, March 2026, our podcast, and we are in the height of season here. Mm-hmm. And as we always do on these podcasts, we like to bring to it the questions that a lot of our customers are asking us. We figure if we're getting asked repeatedly, it might be on the minds of some of our viewers. So jumping right in, the first question that I've had people comment on is the market in Florida crashing? I guess, I never realized this, but if you just watch the media like YouTube or you Google, if you just put in, I did a test. I put in Florida real estate market, and I did it on YouTube. And the headlines of what came up were unbelievable. The very first videos that popped up: foreclosures piling up. Another one titled 32% price cuts. Another one was titled market meltdown. And a fourth one was titled leads the nation in foreclosures. Jeez. So now I can see why some of the people are coming to us saying, I heard the market in Florida is crashing. So what is the real truth?
No. I think the short and simple answer. But I guess that's an example of how bad media sells or gets views. But the truth of it is, if you just follow the supply and the demand, things do feel like they're improving in our market. We are in season, so that's a large part of it. But we are seeing in many cities within the market over 20 properties a day go under contract. Mm-hmm. Inventory is finally holding and not increasing.
It's actually down.
Yeah, it's going down for the first time in several years. Properties are going under contract and sticking together. So, the long answer is the market is doing okay. Now, you had pulled up some stats specifically when it came to like meltdown and foreclosures. What's the reality of that?
Well, a real meltdown would have been go back to 2008 to 2010, 11, around there. There were some estimates of up to 80% of the market was short sale and foreclosures. Prices during that time dropped 30 to 40%. People were forced to sell their homes due to financial duress, and that's a true market crashing, market meltdown scenario. But what we actually have now is the distress sales in our market are less than 2% of the market. The 8% of the mortgages are estimated in Lee County to be the home's worth less than the mortgage. But that doesn't mean those people are selling, and that means also 92% of the people with mortgages still have equity. They can sell their way out of a troubled situation. And remember, then the rest, there's about 40% they estimate in Lee County have no mortgage at all. And so if you have equity, you can sell if you're in a panic situation. A crash happens when you can't afford to stay and you can't afford to sell. Now you're in a distress situation.
Makes sense. Makes sense. Well, thank goodness we're not seeing as much of that. And 2% versus back then 80%. Those are some drastic differences. So
right. That's why we're not in a
we're not
crash.
In a meltdown.
Yeah.
Okay.
Yeah. So the peak, the reason we're even having this conversation is the peak was at 2022. And of course, the years preceding that, especially the COVID years, we saw almost a doubling in prices, right? So that became a real significant issue. And now we're just basically seeing a correction of that extreme surge. We're not seeing a collapse.
Yeah. See, I get this question from customers, and I know you do too, where it's like, it's a follow-up to something else. Like, hey, why is the Florida market so different in comparison to what we're experiencing up north, or where we live up north, or where we want to buy in a different area? Why are some markets still seeing bidding wars, and sometimes buyers are having to jump on inventory when it comes to the market, and we're like the opposite?
Yeah, it's interesting because some of our sellers are from the Northeast and Midwest. Maybe they have a second home here and they put it on the market and they don't understand, why don't we have a bidding war? Yeah. Why don't we have it sold in a week? The markets are way different. So in Northeast United States and in parts of the Midwest, and also states like California, you got a couple factors that have created where bidding wars are happening. And one is underbuilding. Those areas have not built up new construction for like a decade very much. And the second one is that the lock-in effect, right? They got that 2.5% to 3.5% mortgage. And the only way these people are going to sell is if there's a death, a divorce or a job transfer.
Right.
Otherwise, so that means the resale market's frozen. Okay. And then the third thing that affects it is jobs. So those areas are all job hubs, meaning people have to live there. They can't move elsewhere to keep that job. So they also are getting well paid. So they're in the market trying to buy, but there's just not that much to buy. So what is on the market, that's when you have a bidding war. Tight inventory equals bidding wars.
Makes sense.
Mm-hmm. So here, though, what do we got? Plenty of inventory.
Yeah.
Okay. We've got more new homes built like crazy around here the last few years. Yeah. That's all resulted in longer days on the market. And that means that there's plenty of homes for buyers to look at. So sellers are even doing price reductions, as you mentioned. So, different markets, different cycles.
Yeah. But I think, we're in season. Good timing for sellers. Mm-hmm. A lot of great inventory, new construction inventory, good prices, negotiability, great for buyers. And it's not a meltdown. So that's a good thing.
Yeah, and there's some good news out there. Rates are creeping down. That's improving affordability, and that's another question we get from our sellers sometimes. Hey, if are rates going to go down, and should I just wait because maybe I can get more money for my home in a better market when rates go down? So, what do you say to those sellers?
Well, there's a lot of truth to it. So, with the rates coming down, that increases the affordability, and that means that you can have more buyers looking at your home and shopping in your price segment. But the rates are likely going to go down, but steadily over the course of years. I don't think there's any experts out there indicating that rates are just going to drop, I think, as much as buyers want them to really jump into the market, without hesitancy. They're certainly not going to drop as fast or as steep as sellers want them to kind of get them in a different real estate market than the one we're currently in. So, we've talked about it a lot over the past year on our podcast, but the time is, if it's the right time for you to sell, it's the right time. If you can wait and you want to wait, just plan to wait a little longer. It's not going to fix itself in a month. It's not going to fix itself with one little quarter point change in rates. I mean, that's my thought. What's yours?
Well, rates have gone down about 0.75 of a point over the last year. Yeah. That's about how gradual these drops are, right? So you're right. It's not going to be a flood of buyers because of a big rate change. And rate changes are the driver, because every 1% change in interest rates affects buyers' purchasing power by 10%.
Which is huge.
So right now the average buyer, they're saying in Lee County, has a $30,000 more purchasing power now than they did a year ago. And they say that the average buyer, to buy a typical average sale price home in Lee County, which is around $400,000, they actually need to earn about $100,000 a year to buy. Right. Wow. So if rates go down, let's say 5.5%, that's where we're going to start to really see this market light up, because buyers will get off the fence. Affordability will be increased. It'll be cheaper to own versus rent. And of course, when buyers return, what happens to inventory? In theory, it goes down, right? And when inventory goes down, then prices have a chance to go up. But we got to sell off all these homes that we have on the market first. That whole going down and going back up cycle is going to take 12 to 18 months when the interest rates hit that magical point.
Okay. Yeah, so you're saying we can be here for another year, 2 years, who knows? Because we got to get to that point, and then we've got to ride the cycle out.
Yeah, cycles take time, and right now rates drive the buyers, and inventory drives the price. So we got to let those two play out.
Well, I was thinking too. You start to see the market improve. Obviously, sellers are going to tune into that, and then that's going to weigh in the inventory. So market starts to improve, homes start to sell a little bit more quickly. There's more buyers in the marketplace, so the sellers start joining back into the market. So that inventory is going to struggle for a little bit to go down, with more sellers trying to cash in on the good timing. So, let's just get to that point and see where it goes.
Well, and the other thing our sellers are asking us, kind of a similar point, is they're saying, hey, isn't Florida going to get rid of property taxes? Yep. And won't that just make our houses worth a lot more, because everyone's going to run to Florida and buy a house? So what are your thoughts on that?
Well, I think that's, you and I were talking about this before getting on camera here. They're negotiating that in Tallahassee. So there's, some likelihood that something's going to happen. I do think it's going to unlock a lot more buyers and improve values. It's just a matter of to what degree and when. You've honestly done a lot more research on this than me. What have you found looking it up?
Well, right now it's got to get on the 2026 ballot anyway, and it's got. Once it's there, 60% or more of the voters have to approve it. Mm-hmm. And even if they do approve it, it's not going to hit the market until 2027. So we got a timeline that we have to think about. And there's 5 proposals out there. One is a phase out of non-school taxes. This one seems to be the most likely at the moment because it's passed the House and it's headed to the Senate. And by a phase out, I mean they're going to phase it out like over 10 years or so. Okay. So not an immediate impact, right? There is one. The second proposal is an immediate elimination of non-school taxes. There's a third proposal out there to raise the homestead exemption by $200,000, so increase that. The fourth one is to eliminate non-school taxes just for people over 65 years of age. And then the last one is to change how the properties are assessed, to reassess them every 3 years instead of every year. The bottom line, what we're talking about here, what the state's trying to do is increase affordability for homes. And the big challenge with this is going to be how is it going to impact local governments, because local governments need that depend on this revenue. Yeah. So that could play out where we have sales tax increase. We could play out where we have higher impact fees for builders when they build. It could play out where they assess property owners to fund the city's needs. So it'll be interesting to see how it goes. But the bottom line is, if you have lower taxes, right, then buyers could afford more homes. They say It could increase the amount of money they have to spend monthly on a home payment by as much as $600 to $1,000 a month, right? So, but what it doesn't fix is it doesn't fix the insurance costs. Mm-hmm. Okay? So there's a lot of variables here, a lot of uncertainty. Then it's a long-term process. So I think yes, it could drive more people to Florida. It could increase buyer participation because of affordability, but it's not going to be a big boom, right? It's going to be just a gradual lift on prices, perhaps.
Yeah, I think what I'm hearing you say is no matter whether it's interest rates, it's the tax reform or anything else, it's just prepare yourself for a longer than what you expect recovery process. We're talking years.
Yeah. But the good news is here we are in March. We've got the high season. We've got the 2 best months of the year to sell a house in Cape Coral, in my opinion, Fort Myers, all of Lee County. I mean, right now, the islands, and we're seeing it with the buyers' calls right now are picking up. There's 20% more buyers buying now than in off season, and March and April are usually the 2 highest selling months in Lee County.
So if you're a seller and you're on the fence, get off the fence and call your realtor. It's time to sell.
Absolutely. Those buyers will be making those decisions before they leave town.
Yeah, we see it every year. Well, thanks everybody for tuning in. And if you have any questions, we'd love to help you out in real estate. Otherwise, thanks for tuning in and we'll see you next month.
Yeah, awesome.